everyone, and welcome back to another episode of the Market Outlook series. I'm Kavita Agrawal, the founder of EXP Invest, and today we are here to talk about what is going on in the market. So, this first part of the market, we saw good momentum in stocks, maybe not in the broad market, in stocks, but then something unfolded. Very unfortunate news on national level and international level. Seems like a war is brewing, and internationally, we've lost 241 passengers in a very unfortunate plane crash. All these things together are bound to affect sentiments, and that negativity is bound to reflect in the markets. So let's go ahead and take a look at what's going on in the market and what should we expect going forward. We'll start off with the chart of Nifty. All right, so now you're looking at the chart of Nifty, and as you can see here, so Nifty here tried to overcome this resistance of 25,000. It did succeed for some time, but then it did not sustain that. The moment it broke or entered this gap zone, it was destined to fall further. And as soon as it broke below 25,000, it went straight for the next support, which was 24,500. Right? It opened right at that support. Now, since 24,500 has not been breached yet, we can expect further correction. Sorry, since 24,500 has not been breached yet, there is hope. But if this level does get breached, then we are looking at a further correction of all the way to the level of 23,900. Right? So the fact that we opened with a gap down but closed with a green candle, right? So we opened here at exactly at 24,500 almost and then headed higher. So this is giving the expression of bullishness, right? So there is a chance that this has led to a lot of sentimental uh, this has led to a lot of escape or release of the pressure in the market, and now the market can head higher, because if you think about it objectively, this breakout was a bullish signal. You see above this resistance zone, and this support is also a bullish signal. Now, unless the war escalates, the setup is looking positive for us right now. The 20 EMA here is also giving some support. Now, what we can see is that, excuse me, since the 20 EMA was braved or breached bullishly on back on the 15th of April, since then it was taken support on once and twice. Last time it gave a brief breach of the 20 EMA. This time the 20 EMA breach has become bigger. So this one is a negative signal, right? But again, on the RSI of 75-minute time frame, what are we seeing? That the level of 40 has maintained, uh, has the 40 level of 40 has given good support, and the RSI is still going overbought. On the daily time frame, coming to the daily time frame, on the daily time frame here, there is a little bit of resistance that came in from the level of 60 on the daily chart. Not very promising, I'll be honest. This was still indicating bullishness for us, right? The fact that the RSI was going above the level of 60 was indicating bullishness. So now we have two not so bullish signals, which is breach of 20 EMA and the daily time frames RSI 25 period taking resistance exactly at the level of 60. So not very, sort of bearish signals. Um, so 23,900, if you see here, this also offers the previous high support, which means this is where the previous, when the index was in correction, twice it created high around this level. So this resistance has now turned into support. And so if the price does decline further and break below 24,500, 23,900, 23,800 roughly becomes very important support. So from a swing trading or momentum trading perspective, what is happening or what has happened and what should you do when this decline happened, right? uh, Personally for me, because I focus on risk management very strictly, my stop losses started getting triggered here. Almost all of my position got exited here. By this morning I only had three active positions. Out of those three, two again triggered stop loss when the market opened with a big gap down, but because I have conviction on one of them, I re-entered one of them. Right? And then there are some other stocks which have been part of my assessment list, which I have gone ahead and made fresh positions in. Right? So now again, the first thing that I did as soon as I entered those stocks was set up my stop loss orders. We will also assess all the remaining alerts on my system so that you can get an idea of how I function. All right. So this is Nifty. Now let's move on to the indices list and let's look at the next sectors. So remember the last week when we did the market outlook, these were the sectors that we concluded as, looking bullish. So we said the auto sector looked bullish. So what we'll do now is we'll go through these sector indices one by one and assess whether they still look bullish or not. So starting off with the auto sector. Now the auto sector is currently standing at a stage of strong resistance. So it definitely needs to overcome this resistance zone to establish a strong rally. But I still think it has already become bullish. Why? Because you'll see here after a very long period, the auto sector's index has gone overbought. This is positive signal. Also, in addition to going overbought, it has also sustained above key resistance cluster. So 20, 250 EMA, 100 EMA, and 20 EMA. All three have been overcome over here, right? Now it seems like the 20 EMA has been taken support at, and over here sort of 100, the 100 EMA has also kind of been tested. I think the auto sector is offering good opportunity, and I am looking out actively at Aisha Motor, Maruti, and Bajaj Auto for fresh positions. Next, Bank Nifty. So in Bank Nifty, we can see the positive range shift has been very pronounced. It's been very, very bullish since I would say this point. It has been very bullish, and even now, um, so even now it is bullish from a long-term perspective, but from a short-term perspective, it is showing a negative divergence on the daily time frame, which can mean that a small correction is to be expected. Taking a look at the 75-minute. So even on the 75-minute time frame, when a negative divergence does show, we can expect the level of 30 to get tested. And over here, it does appear like a negative divergence is also forming up on the 75-minute time frame. So the Bank Nifty, I think, can come down to retest roughly this level of 55,000, 54,000. So I think until that happens, so we will move the auto sector and the Bank Nifty a little bit lower. Let's change this date to 12. Right. The reason I move them lower is because they both have, so while the broad trend continues to remain bullish, they're not immediately bullish. There is a caveat there. So for the auto sector, there is a resistance that still needs to be crossed. So actually, let's move them to potential. And for Bank Nifty, there is a negative divergence that needs to be realized. Right. Next, Let's look at India's probably the favorite, the most favorite sector, defense. So the defense sector continues to look very bullish, and I think this dip back to the 20 EMA line, right, is an entry opportunity. So the underlying trend on the defense stocks is very strong. And last week I told you that the defense stocks continue to remain strong and they're just taking a breather. I think that breather phase is also over and they're ready to rally. So defense stocks definitely look very attractive for the next 1 or 2 weeks. All right, next let's take a look at the infra sector. Hmm. So the weekly time frame is definitely bullish, but on the daily time frame, we've been waiting for the establishment of a proper positive range shift and a higher high, right? So I would say that the 75-minute time, the daily time frame has kind of established a positive range on the daily chart, and but it is still not giving a very clear cut signal. And the 75-minute time frame is already the 75-minute time frame has turned kind of correctionary again. So I think on infra what I would expect is a little bit of correction. I'm not getting a lot of conviction right now in infra, so I'm going to move it to potential. So we'll take a look at reality. Okay, so the realty sector continues to look pretty bullish, and this correction over here, I think this is going to offer opportunity for bounce back. Let's take a look at Prestige, because Prestige Estates Limited had given a very strong rally. And I personally have been wanting to re-enter the stock. We did participate in first part of the rally, but we exited kind of a little early, leading to profits, but not as much profit as we could have made. So on here on Prestige 75-minute time frame, I can see 75-minute chart has established a higher high already, and it looks like it is on a path to recovery. You see, the downtrend has kind of been um, the trend has kind of been violated. And if you see the past price action of Prestige, it's a super trender. So it barely even comes down enough to retest the 20 EMA. So here it has come very close to the 20 EMA. So I think this is a potentially a good entry level. I was hoping to see the levels of 146, 1493 or 1490, because that's a previous high level, but it looks pretty unlikely that the stock is going to come down all the way. So what I will do is I'm going to set up a vertical line here and write the message may be good for entry now. And so what happens when the market will open on Monday, I will get this alert in my forefront. I will also add this stock to my assessment list, but I will add it today. So I will add section and I will enter the date, June 12th, right? All right. Because this stock has become attractive to enter now, right? Um, so these dates show that these stocks were added to the assessment list on such and such dates. Okay, so let's go back to indices. Give me a moment here. Okay. So moving on with this, we did the rally. Let's take a look at the PSU bank sector. Okay, so the PSU bank sector, so PSU bank sector surprisingly works very well with trend lines, and what I can see, it has declined and is now testing this trend line that I have drawn, right? This support trend line. So PSU banking sector can also be somewhere to look for active opportunities in. So one stock that's at the top of my head is RBL Bank. Let's take a look at the chart quickly. So RBL Bank has been giving really strong rallies since a while, and again, even in this stock, we did participate in the rally. We did make some profits, but not all the way. So we are definitely keen to re-enter again when the stock uh, resumes the rally. So now we can see that this strong 11% rally in just a 4-day period has been broken, and it is now taking a correction. I think it can dip a little bit more and give an entry opportunity somewhere close to this previous high level. Okay, so the previous high level has actually already been achieved in the sense that this dip has touched it. So I think around 217, another opportunity can offer itself up. Another stock that I am interested in this sector is Bank India. So let's see what's happening here. Here also I can see the level of 40 has given good support. I'm going to reenact this alert. And it doesn't look very likely that the stock is going to come all the way down here. It appears like this is the level that we should be interested in, right? So let's move the stock Bank India also in this segment. Okay. Now let's go back to indices. What about private banking index? Huh. So curious that Bank Nifty showed a negative divergence and is looking weak, but private banking and PSU Bank both are looking not weak. In fact, they are looking like they are ready to rally. So, what this tells me is that instead of going for the frontlining banks, the large, mega large cap banks, which are part of Bank Nifty, it is better to go for the smaller players right now. They can give you better opportunity, better returns, right? Finance sector also is showing a negative divergence. Basically, what does negative divergence mean? It is indicating to you that the broad the broad trend has become weaker. Okay, so what you can do now is look at the private banking sector, look at the public banking sector, but avoid the mega large cap stocks. And even in the finance sector, maybe wait for a little bit more confirmations here, because I kind of want to see the finance sector retest this level 25,500 and then maybe create positions there. So I'm going to move the finance to potential. Let's now look at Nifty oil and gas on the daily chart. All right. Um, so oil and gas had a positive divergence here, and it has created a higher high because it has breached above this resistance and created high above there. Now it is back on the 20 EMA. Okay, so that's that. And let's see here on 75-minute time frame, it has turned bullish this point onward. We did see some jittery movement here, but that is very normal when the trend is turning. So here the trend was turning from bearish to bullish, so it did kind of stretch towards both extremes at the same time, but it has settled on the bull trend now. So I think oil and gas is also looking pretty attractive. So Supreme Industries. So let's this stock. I'm very bullish on this stock from a long term perspective because it's a very cyclical company, very cyclical stock, but it has tendencies to give really good rallies, right? So I think now it has, after a long time, long correction, it has established a higher high and has just given a small little dip to offering a potential entry opportunity. So I think um, when the market opens, I'm going to reassess this and see if there is a setup that can be taken, um, a setup that can be taken up. So oil and gas, I'm going to continue to keep it in the bullish segment. PSE sector. So the PSE sector also continues to remain bullish, but with a pinch of a grain of salt. Why grain of salt? Because small negative divergence, very weak negative divergence here, which might as well have been realized already. So I think I'm going to continue keeping the PSE sector in the bullish segment for now. um, and on the daily chart, what does concern me is that the PSE sector is kind of being very shy of breaking above the level of 60. I don't know why. Why is it doing that? It is not breaking above, it's not breaking the water or the surface above the level of 60 on the RSI 25 period. Interesting. So what we should do is we should look out for this level as a key resistance and be very cautious when you're taking positions in this sector. Um, so BEL, well, it does come under defense, but I think this has very good opportunity and it has taken a bit of a dip here. But well, we look at some other stocks from PSE, not BEL, because it kind of falls in other sector also. Um, let's take a look at FMCG in the meanwhile. So FMCG is not doing so well. It has declined all the way back to the trend line. So we're going to remove FMCG and consumption from this, and also we'll remove media. So these are the sectors that we want to kind of focus for the next um, few, maybe couple of weeks. Pharma has, so the pharma sector has yet not crossed above my resistance zone. It did try, but it did not sustain. It fell back down. The daily chart has also not turned overbought yet, which means that the underlying trend is still a little mixed. 75-minute time frame seems to be giving signal. So I will keep an eye on the pharma and the healthcare sector for during the next week for a potential turnaround and better confirmations. But I will not be looking at making active positions in these either of these sectors for now. Consumer durables not looking that great. Energy is looking a lot better this week, so we will move it up because 75-minute time frame is definitely in the positive range shift. Key EMA levels have been breached and daily chart has gone overbought into 50 EMA is taking support. So energy is definitely looking good now. Healthcare metal, I really want to look at this chart because this week I saw strong rallies in Nelco. I was able to make 10% profits in just 2 or 3 days of holding. So Nelco we discussed I think on Monday, and why the discussion itself, I created a position in my capital management service, and I was able to book 10% profit in just 3 days. It moved so fast I didn't even get a chance to like make a recommendation in the short term subscription program, right? So I think, and usually what happens in Nelco, because it's a smaller company than the other big players, it tends to give much early signals of potential turnarounds in the metal sector. That's at least my reading, right? So metal sector, I feel, let's I feel there is something brewing here, and it is preparing for a comeback. It has definitely created this bottom here, and it has created the bottom with a positive divergence, right? And it has established a higher high. So I think it's safe to say that the metal sector is ready to be moved back into the bullish segment. That's my opinion. Let's move on to the IT sector. So the IT sector will continue to remain in neutral as long as it hasn't crossed above the 250 EMA, which is this blue line, and the daily charts RSI has not gone overboard. So as long as either of these things would happen, I'm going to continue to keep this in the bearish segment. Cool. So that is with the that is about all the indices. So we've covered the index discussion. We've covered the broad market index, that is Nifty. Now let's take a look at my alerts. But before alerts, let's take a look at the questions that are being posted. So I will take one question per person. And okay, so Gopeji says, "Hello, ma'am. I'm hello to you too." So some people have commented RBL Bank is a private sector bank, not in PSU. Thank you for the information. Shaurya Solanki is asking for GMTC. GMTC. Okay. Hmm. Wait, did I write that wrong? No. GMDC. Probably my internet is acting up a little bit. Okay, so let's remove the drawings and let's reassess this because I'm looking at GMDC after a pretty long time. So GMDC, Gujarat Mineral, right? So distribution, wholesale distributors. So GMDC, we all know, is a pretty good company, or from a stock market investment perspective, it tends to give pretty strong rallies, goes into correction, but then resumes giving rallies once again, which makes it very attractive for retail traders to dabble in. Here we can see, so this bothers me, the fact that this trend was broken here. And here also, if you see, the momentum was pretty intact all the way until this, and then there was a negative divergence here. But maybe the negative divergence has played out with this entire correction, and now very evident that there is a higher high formation right here. So the stock has definitely turned bullish after a very, very long time. But what should we expect? Let's go down to the 75-minute time frame. So the 75-minute time frame appears to have turned bullish this point onward. But is it a good idea to make a position now? Let's take a look at the chart's historical price action. So here also it came out of a correction, and it was, so you will notice the stock has a tendency of revisiting the level of 40 a lot. So every uptrend it will give you 2 3 opportunities to re-enter. So it'll give you 2 3 opportunities to re-enter, but there is also this thing that once it has established the bull trend, it becomes a super trender, and then you know extends the rally without much of a break, basically without giving you much of an entry opportunity, right? So it does display on the smaller time frame a super trender personality. So the fact that it has already given breakout above resistance zones and with phenomenal volumes, I think this dip is a very attractive entry opportunity, but of course you have to maintain stop loss. Now GMDC is not part of my watch list for whatever reason, so I will not be going long in this. But if I had to assess the opportunities, I think this would be a conservative first target around 490, and using the long position tool. Stop loss there and the target at around 490, sorry. The risk reward ratio at the current market price is not attractive, so wait for the price to come back to the level of 400. That is potentially a better entry zone for you. Okay, let's look at some other comments. I will only look at comments from people who are posting one stock name. For those who are posting two stock names, I'm going to completely ignore. So Sarthak Tripathi has, okay, everybody is posting two stock names. So Kundan has posted one. Thank you, Kundan, for being considerate. Tata Steel. Okay, so um, um, Tata Steel has not been giving the kind of chart development that I like to trade. So here on the daily chart, you can see there's a mild negative divergence, which indicates that there should be some correction. So if this stock comes back, so see, I set this potential entry over here at 160. Why? Because the idea was that I need this stock to come up and sustain above this resistance again for me to take position in. But it has not done that. In fact, it came all the way to pretty much 159 point something and then declined. It did not sustain above the potential entry zone, and because it has broken below the 20 EMA, I believe it can now decline to 145. So when it declines to 145 is when I will reassess what I should do in this stock. But until then, I think I'm going to refrain from creating an active position unless the stock chart gets a little bit clearer for me to make a decision. And also the fact that in the previous dip, 75 minutes RSI broke below the level of 30 also is pretty unsettling for me. I don't like that. Okay, so thank you for that. We looked at Kundan's request. So, just a reminder to all of you, if you are interested in connecting with me or knowing about when I come live, because these days it's becoming really hard for me to commit to a time and come live exactly on that time, like I've been doing since the last 3 years, because I have a 6-month old daughter, and as much as you try to predict their schedules doesn't really work. So I'm usually like 10 minutes, sometimes even 30 minutes ahead or behind. But before I come live, I do put a message out on my Telegram channel. So if you like what you see in terms of my content, my work, if you want to learn with me, or if you just want to be able to attend more of these, I suggest you join my Telegram channel. So my Telegram channel is called Trade with Kavita, and you can click this link t.me slash, hold on, let me type it for you, Trade with Kavita, right? So you can join this channel. You can also just search for Trade with Kavita on Telegram and join the channel. Just make sure you're joining the correct one, because obviously, like with everything else, there are lots of fake channels running, and it's so easy to steal the DP off on Telegram, right? So that has already happened. So you'll be seeing a lot of profiles with my face on it. I haven't seen in a while how many are there right now. But let's see, Trade with Kavita. So I can see there are about, I see one fake, two fake, three, four. Wow. So a person has put my name and then his name in the fake channel. Disgusting. But yeah, there are about 4 or 5 fake channels. So I would suggest that you be careful and you join the correct one. So the correct channel will have about 7,700, so 7,700 or 7,800 kind of subscribers. So make sure that you're joining that one. But anyways, let's come back to this. I see a request from someone for HCL Tech. So let's take a look at HCL Tech. Hold on. What I want to do is simply be able to check out my comments that are coming in. Set it up here. Cool. Um, so what do we look at HCL Tech? What does it look like? HCL Tech here, uh, it has overcome the previous high. It has overcome the key resistances from the EMAs. But is it ready to give us a fresh new rally? I think it might be getting ready for it, but it's still taking kind of baby steps. It's still not established into a bull trend, because you can see typically when HCL Tech turns bullish, it tends to rally pretty strongly. Let's remove the previous drawings and let's create some fresh trend lines. So that is a channel for sure. I want to keep a line here as well. So this has been tested and there, okay, so if this gets broken above, then we are expecting a pretty strong rally up to the next one. Now, I personally am not very interested in doing active swing trading in HCL Tech because it's a slow mover. It covers maybe 20-25%, but it takes a long time to do it. It doesn't move because it's such a big company, right? Look at this, 30% in 159 days. There are stocks which are giving me 40-45% in 30 days, and honestly swing trading is very hard. So when I try to trade in those stocks, while it is more risky, what it does for me is, even if I can capture one third of the rally unfolding, right, it gives me a very good outcome overall. So every month, if I'm able to, which I am able to, grow the capital by 3 to 5%, right, it's wonderful. uh sure, it can be frustrating because there's always your a lot of times you see that you sold the stock and the stock tended to go higher, or you bought the stock but there was a lower buying price available. But as long as I stick to my 5 step process of analysis or 5 step process of execution and 5 step process of execution, I'm seeing pretty good results even while being able to capture just one third of the rally. And this is my full time job, right? Sure, long term investing gives better results and whatever. But for me, this is my bread and butter. This is what I do all day long. So for me, swing trading and momentum trading has been doing really well. Of course, that being said, it works very well in the bullish market, not so well in the bearish market, right? So that's that. um I can see some stock requests for Dr. Reddy, Aditya Birla Fashion. I'm not very keen on checking these stocks out because I know that those sectors don't have a lot of potential. And like, we can look at all the stocks that we want, but we also have to be smart about our efforts, where we are kind of putting them in and what is to be expected. Hitesh is asking for the analysis of Bitcoin. Hitesh, okay, I will entertain you. I will, I will humor your request. So, because I do invest in Bitcoin, and I am personally very bullish in Bitcoin. So, I think because this previous high has been broken, my target on Bitcoin is 170K. This is not an advice for you to go ahead and invest in Bitcoin, because remember, crypto is extremely, extremely risky. So, unless you are interested in long term buy and hold, and you have enough disposable income so that even if it goes to zero, it doesn't really bother you, that is the only situation in which you should go ahead with any kind of cryptocurrency investment. Again, I am not giving you the advice to do that, because like I said, it is very, very risky. So let's now move forward and take a look at our let's take a look at our alerts. So we've got quite a bit of alerts here to work with. So Atul, so this stock is telling me that the 75-minute has gone to 40. Okay, and it has started to rally here. It has created a fresh new rally. I'm going to delete this alert because it's become old. And Atul did try to resume into a rally here, but then unfortunately gave all of that up again, and now it's coming back up. So what we want is, we want the stock to sustain above this previous high, right? So it is currently at this resistance zone. Let's see, let's set this alert here, and if it sustains above this level of around 7,000, 7,100, then I think I'll be more interested in making a position here. So from a weekly perspective, there was a very strong uptrend here, but then the stock went into correction, and now it seems to have completed the ABC correction, right? So this was A, this was a small B, and then this was C. So it, for me, it needs to overcome this peak 8,100. I will move it up from 70, whatever that was, 7,700 to 8,100. Unless it does that, I think I'm going to refrain from dabbling in this stock. Chemical stocks, I think, are starting to show something very interesting. So keep an eye out for that sector as well. Apar Industries is a very strong company, and I think this dip to the 20 EMA was good. This thing. So my note here says strong momentum is positive. It is a super trender. Entry opportunities at 20 EMA. So it has come down to the 20 EMA. But because the broad market is looking a little bit negative, I am skeptical, and that is why my potential entry is set at the 250 EMA, or coinciding with this previous dip, previous low level. So that is where I'm going to look out for making a potential entry. Now let's just make sure that we have removed all. Yes, we have. Now let's move on to the next stock, National Highway. We have two alerts here. Basically, it has established a higher high. So we had a position here, but yesterday, because the market did look like it could go bearish, we booked our profits and we got out. Now what we're seeing is that the stock has continued to rally upward, and the volume pickup has been quite strong. So the question that I am facing right now is, do I want to re-enter the stock now? Now, this is tricky because a lot of times re-entering stocks after exiting immediately can unleash the full force of our biases. And biases are not our friends in the market, right? Because they are triggered by emotions. So here my objectivity might be compromised. So what should I do? So I've drawn more channels within this trend that was unfolding. Now, by the way, National Highway is a really strong moving stock. If you see within these channels that I've drawn, each channel is almost 9-10%. So since this over here, see, it moved 13% in 11 days. Here, this entire rally was 26% in just 14 days. This entire leg is 20% in just 38 days, right? And then it's gone into correction. Now it has, so this correction that started sometime on 21st April all the way till the first week of June, this correction came after a long time, since the stock had been rallying since 28th Jan, and since then the first time it came into correction. So what I think is the fact that it has broken above this higher high is pretty bullish. So I'm going to draw this support zone here. And over the next few days, I won't go long on the stock immediately, but over the next few days, if the stock revisits this support level, then I will use that for a potential entry. So I'm going to delete this alert because it's coming in my way, and I'm going to set a message here for potential entry, and I'm going to set my alert. And then lastly, I am also going to add it to my assessment list. I think it probably already is part of that, or I had removed it, but now it's back on the list. So good. Let's look at the next stock, which is Bajaj Auto. So Bajaj Auto, I can see it triggered my stop loss this morning, but it, but I think, did I? Wait, let me check. Yeah, so it did trigger my stop loss this morning, but I think it is ready to kind of continue the rally upward. So we discussed auto sector and we saw there is, bullishness there. So what I am going to do is I am going to tomorrow re-enter this stock. So let's add it back to the assessment list. And I think there is bullishness here. We'll move the stop loss there, set this vertical line and set the alert. Consider re-entering. Now remember, at a point of time we only need 10 stocks to be able to go long on. We don't need more than that. Maybe 15 at max, but definitely not more than that, because uh, when you over allocate capital to stocks, when we over allocate capital across different stocks, right, in the portfolio, our capital's efficiency significantly reduces. So we don't want to, uh, so we don't want that. Okay, so that is what we are going to do. Sorry, I confused NH with another stock. Don't blame me. It's 5:30 a.m. here. It's actually Narayana Hridalaya, not National Highway, like I said. Hospital and nursing management. So in my head, I'm thinking healthcare, and out loud, I'm saying something else. So, but anyways, let's get back to this. G ship I've already assessed. AIJ, AIA, ENG. What is happening here? So I typically really like the stock for swing trading because it gives beautiful swing movements. And there is a strong positive divergence right here near this bottom. And the stock has also gone ahead and established its first higher high. In fact, today it has given a pullback to this previous high level, and I think this is a good entry zone. So this stock, where I have been trying to find good potential entry, I think now it has come to an attractive position, and the risk reward ratio also makes sense for me. So this is another stock that I'm going to potentially look at. So 3431. So let's see. I can see in my trading account there was a buy order there for, I think, what it said, 100 stocks, right? So what I'm going to do is create an AMO for 100 stocks at the same price for tomorrow. So 3430. I think it can give me that. So this I might change to one. Hmm. Okay, 132 is a better number. 3430. Done. All right. So this basically changes to, yeah, cool. Um, So that is what we are seeing on AI. Basically, what I'm looking for to make long positions in stocks, what I'm looking for is there should be a bullish trend on the daily chart. Number two, on the 75-minute time frame, positive range shift obviously has to be there. If there is a positive divergence, even better. I don't want to buy stock when it's consistently creating higher highs. I want to enter the stock when it takes a breather. So typically, stocks which have established higher high have a tendency to pull back to their previous high level. So that is where I'm going to ideally create position at. Next thing is volume. When the stock is moving up, right, when it is rallying, I want to see that there is volume pickup, because that volume pickup indicates to us that when the rally continues, the volume will come back. So we want to see volume pickup on the bullish side of the trend. We want to see volume decline when the breather happens, when the correction happens. If the correction happens with high volumes, it means a lot of people sold. It means the sellers controlled the price. We don't want that. Okay, we want the buyers. Sorry, it means that the buyers control the price. We don't want that. When the decline happens, if the volume is too strong, the buyers are controlling the price, not good. Okay, so we don't want increasing volumes on price declines. We want increasing volumes on price rallies and then buy the dip in that kind of a situation. So you'll often see that I'm looking for this previous high zones, because that is where good entry opportunity comes for stocks which are very bullish. Okay. Next, let's look at SK. Okay, that's my cue. I gotta go because my baby's crying. I'm going to finish this off later on my own time. Thank you so much for joining in today's session, and I will see you guys again on maybe Monday. Thank you.